Hello and welcome to Uniper's Market Insights. My name is Florian Oberländer, and as usual, I'm very happy to welcome our chief analyst, Gregor Pett. Hi, Gregor.
Hello, Florian. Good to see you.
Gregor, today we want to discuss a more complex and more difficult topic, the crisis in the Middle East. And of course, there's a human side to it, which is really, really difficult to put into words. But for today, we will try to emphasize on the impact on the global energy markets. And from what you've seen so far, what has been the impact on the energy markets of the crisis?
Yeah, the impact has been quite moderate, so the markets are not in panic mode. We have seen some price impacts, but they were not extreme, which is a sign that the markets hope that the situation will calm down a little bit. It's not easy in the light, as you mentioned, of the pictures we see from there, but that is the current perception of the markets.
And how exactly are the concerned countries, especially when we're talking about the Eastern Mediterranean area, contributing to the supply situation of the energy markets? Maybe start with gas and LNG.
Yeah, so Israel is an important supplier of gas. So they have significant fields and produce 22 million cubic meters a year of natural gas. The names that come to mind are, for example, the Tamar field or Leviathan, very big field. The gas is then sent by pipeline to Egypt, and part of that, almost half of the volumes, is exported via Egypt as LNG. So indirectly, Israel has a significant contribution to the global LNG markets, but it's not as big as, for example, the volumes that come out of Australia. And we discussed it the other day in this format here about the strikes in Australia and the impact that had on markets. So the impact the current situation can have is, of course, significantly lower than the ones we've seen at that time.
Okay, understood. Now, does it look with the oil markets, a similar movement there?
Yeah, Israel is a net importer of oil. So Israel in itself has not such a big impact on the global oil markets, but of course the region is one of the oil richest regions in the world, the Middle East. Yeah, and if we extend the scope to the, for example, the Gulf region, then we are talking about order of magnitude 20% of global oil and gas production that could be affected if we see disruptions or blockings in that area.
Okay, and in that supply context, we always hear the name Suez Canal. I think everybody is aware of it. However, what do you see there in regards to impact and importance, and are there any other bottlenecks when we talk about supply?
Yeah, the Suez Canal is obviously a very strong unknown bottleneck. A lot of the ship traffic, including oil and gas, goes through to reach the Mediterranean then and Europe further on. And so if anything happens there, and we've seen it in recent years when, for example, a ship then was basically moving and then blocking the Suez Canal, and was an accident, but it blocked the canal for some days, and that had some impact on global supply chains when it comes to spare parts and supply of materials. And that, of course, could happen here also. You were mentioning also other points, and what comes to mind is the Strait of Hormuz. That is basically the exit of the Persian Gulf, and then we are talking of a lot of impact of oil and gas supply. So, for example, Qatar, one of the biggest exporters of LNG, their shipping route goes through that part, through the Straits of Hormuz. For oil, it's similar, Saudi Arabia, for example, ships a lot of oil then through that route. They also have pipelines that go west, so they also have alternatives. But we would really, if something happens there, been talking about a much bigger impact.
Yeah, and then maybe just to give our audience an idea on the time delay. So if a ship, for example, delivering LNG through the canal of Suez and it's blocked, it has to go around Africa, which will take around another 14 days. So quite a huge impact then, of course, on deliveries, especially to Europe.
Absolutely.
Gregor, when we talk about oil, there are some voices in the market that are currently comparing the current situation in the Middle East to the Yom Kippur War from 1973. Back then, the war had huge impact on the world economy, especially mentioning the role of the OPEC back then. Do you see any parallel developments currently?
Well, superficially, at the first glance, there are some parallels. So the attack happened on exactly almost exactly 50 years after the attack that started the Yom Kippur War. Then, of course, it was a surprise. Yeah, neither intelligence agencies in Israel nor in the US had anticipated what was happening then. But I think there almost the parallels end, because in 1973, it was mainly a coalition led by Egypt and Syria that led the attack, whereas today their role is totally different. So Egypt in particular is cooperating with Israel when it comes to energy supplies, and their role is they are not an attacker in this scenario. On the other hand, there are other players that in the region that are important, whose role has changed. For example, Iran, that is backing Hamas, for example, and they in 1973, obviously that was before the revolution in Tehran, and they were having a totally different role. So also in 1973, you mentioned the impact on the markets. So the Egyptian president, Anwar el-Sadat, who ordered the attack, had secured support of the OPEC and in particular Saudi Arabia at the time, that they would use the so-called oil weapon in case Western countries and in particular the US would support Israel. And that happened. The OPEC then imposed restrictions, production restrictions of 5%, and those were progressing them over time, and also an embargo towards so-called friendly or unfriendly countries. And we have no similar reaction today. So there is nothing similar we can see. Also, the world economy has changed. So the world economy is less dependent in the US and also in Europe on oil than it was in 1973, and in particular, the US has enough oil now, so they are not dependent on the situation. So any effect on oil would not, and also on gas, would not harm the US. So that for sure has changed compared to the situation in 1973. Also, we saw, some of us will remember, there were car-free Sundays then in Germany, for example, more a symbolic gesture than anything, but certainly something that attracted a lot of attention in Europe and in Germany.
Okay, so only comparable on certain levels.
Yeah. Mm-hmm.
Okay, and back then the war lasted around 2 weeks, and then, as you said, had major impact on the energy markets, on the global ones. Now, looking a little bit into the future, do you already see some scenarios on how this one could play out when we talk about the situation in the Middle East?
Yeah, it certainly depends on how widely the conflict spreads and how many countries in the region and globally will get involved in that. So I mentioned these points like the Suez Canal and the Strait of Hormuz. And if basically countries in the region got involved, and those would be affected. that would be certainly more severe than the current situation from an energy economic perspective. I'm not talking about the people in the area for whom it's, of course, that's terrible. It also energy-wise, it would then spread more globally. Yeah.
Okay, understood. And yeah, hopefully we can talk about positive developments in the next episodes. But at this point, Gregor, thank you very much. I know it's a very difficult and hard topic to talk about, especially putting it into the context of energy markets.
Yeah, thank you, Florian. It is indeed difficult. Yeah,
exactly. Yeah, and to you out there, as I said, hopefully we will have more positive news to discuss in the next round. Until then, see you then. Bye-bye.